Hi and welcome to the Market Alert for Thursday, the 1st of April 2021. So the main headline news is that Biden will unveil his $2 trillion infrastructure plan today. This is yesterday, by the way, not today. And the market reacted to this, which I'll show you shortly. And here are the details. Well, we don't need to know the details. We just need to know that another $2 trillion has been printed to devalue the dollar. But that's actually looking stronger overnight. But more details here. The White House unveils Biden's $2 trillion. It's actually $2.25 trillion. Not that the $225 billion makes a lot of difference when you've got $28 trillion in debt and nearly $10 trillion on the balance sheet at the Federal Reserve. If investors are weighing the risks appropriately, there shouldn't be much impact on the markets in the short term. No, because it's always interpreted as good news. Initially for the markets because there's more money in the M2, etc. The employment figures weren't too brilliant yesterday, but the service sector jobs saw. Well, that's because they're opening up pubs, clubs, etc. in the US. So that's a bit of a given, really. And I suppose this is going to be the same tomorrow when the jobless figures are released, but the markets will be closed tomorrow, and the UK, they'll be closed on Monday as well. But as Blaine says here, the market has 1929, 1987, 2000 writ in bold blood letters all over it, and I couldn't agree more. You only have to look at the monthly charts of all of these markets, and they're just simply parabolic and due for a major correction. I don't know about a crash, but then, as we saw in yesterday's market alert, we don't know what's coming down the line. We've got the problem, as it says here, is Greensill and Archegos royal markets and cause losses. They beg the question, who is next? Why is 21 turning into the year of the scams are unravelling? Will leverage trigger wider implosion, or will it be something else like liquidity? Well, if it's the sort of the leverage from the derivatives market, then God help us all. Meanwhile, the yield yesterday moving to the upside, which we saw, but then coming back under some sort of control. As we saw on Tuesday, the market up at 1.77 and then obviously trying to stay below 1.75 for yesterday. And news today, we've got OPEC meeting for all of today and ISM manufacturing for the US, and that's at 3 p.m. The only news item today. I say tomorrow you've got the non-farm payroll, but the markets will be closed, so this will be released as usual, but the markets won't be able to react to it until Monday. Okay, let's have a look at the Dow. Let's see if we've got this. I'll start off with the daily charts. Not had a look at this yet, so let me just rearrange the chart a bit so we can see. So we've got some weakness in the Dow here overnight. Prices are starting to move below the 5-bar moving average. So again, these fibs that we have listed here, we'll keep those intact. Looks like we are due for a correction, as I said earlier. So noticed yesterday a bit of weakness to the upside, and in particular, let me just go back to this. I just wanted to show you why I'm saying there's likely to be some reaction. I'll go down to the 1 minute chart, and I'm just going to show you what happened in the first minutes of trading yesterday when the market opened, and there you go. You can see precisely what happened. Biden makes his announcement. It's always interpreted as good news to begin with, and then you've got an 89% retracement there, and then the rest has been downhill. So the initial suck the sheep in, and then we'll sell onto them, given the backdrop of how far this market's actually come up in the last year. As you can see there, massive move to the upside, 16,000 points. So due for a correction there. Meanwhile, in the German DAX, same here. It's a bit stronger than the Dow, actually. It's got a new all-time high made overnight. But again, I would look at this market now for some form of correction to come into place. I'm going to draw in these fibs. These are the areas, but you've got the 5-bar moving average a long way down to 14,809. So again, I would look at the 5-bar moving average as the initial downside target if there is any weakness during today's session. I'd be surprised if there is, but you never know what might come out of the woodwork with these sorts of days when it's sort of, before the Good Friday celebrations. And to give them the opportunity to exit thinking, well, hang on, we've got the non-farm payroll figures. They could be really bad. The market could gap down overnight on Sunday night in the US. So there's all these other questions to throw into the mix as well. So we could see the weakness sort of continue through here. Let's just have a look, see what we've got. There's the 15-minute chart. You can see the new all-time high and the DP level there. We'll look at it in a bit more detail in a shorter time frame just before we finish with the stock markets, and drag this over. And we can see again we've got that spike up overnight, making the new all-time high through the previous day's high, back through the 200 MA and down towards the DP, and now just coiling in a sideways move there for the DAX at the moment. So let's move along, have a look at the precious metals, the dollar as well. We can see that silver moved up yesterday. I bought yesterday morning, which you'll see there added into the chart. We've got it here. I've moved the stop to break even already because it's looking fairly weak. They've just bought back in here, but it's fairly weakish. So I'm just saying, well, if we take out this low again, then we go down to the targets that we've got here and down to here at $22. So there's no point in exposing myself when I could actually buy the market a lot lower if it does take it out. But at the moment, we can see there they've just bought in. Let's have a look at this in this chart where it's a bit more clearer. There you can see they're buying off the DP at the moment. And interestingly enough, gold is moving to the upside as well, stronger than silver this morning, which has been unusual because it's actually been weaker than silver. So in the gold markets, we had this low that was put in here, left this high behind, and then traded down to here. So we know it's going to be an 89% retracement there, where the market found support and now is moving back to the upside. For how long, I don't know. I mean, once the manipulators stop this, putting the gold and the silver market under pressure and shorting it, when they do let it off, then it's just going to just see this move very, very sharply to the upside. In the monthly chart of gold is the high, which will mark up so that you can see this as well, which is $2,000. We've come all the way down to the 62% retracement. We've got buying pressure in the monthly chart here, so that's a positive as well, and we're sitting at the 20-bar moving average also, so we could see a bit of a move to the upside from here, and these would be the initial targets. But let me just add in a 38 and a 50 there as well, just so that we've got some near-term fibs, particularly in the monthly chart. So again, these are the areas of resistance for the gold market moving back to the upside, so we'll save this as well. Now the dollar is moving up on the overnight, as you can see here. Now this is unusual given the fact that Biden is teeing up another 2.25 trillion, and yesterday's weakness is indicative of this, where the market came back and the precious metals were allowed to actually move up. But we'll have to see, and it's also going to be interesting with the yield as well, because that's really got to stay above that 177 high that it's made. If we just have another look at this, as I said yesterday, there's this sort of relationship between all of these. We don't want this going up to 2%. There we go. We don't want this going up to 2%, because if it does, then we're going to see the dollar moving up to either of these areas here, where the market would eventually stop, but that would send the silver market down to $22, and also gold would come under huge pressure as well, and could even take out the low at 1676, which would then take us to the monthly chart of moving down to 78% of 1588 as well. So you've got to look at all of these areas and also the relationship between these, which is why I've put them all in the one workspace for you so that we can keep an eye on these over the next few days and weeks. But like I say, the good news is all of this money printing, and once yields, if yields do get to 2%, then that will be intervention time by the Fed to try and control that yield curve, because if they don't, then the borrowings and the debt is going to become very, very expensive. So going forward, for me, it's gold and silver, but we might get that last shakeout in the background, and that will be because they'll let the yield go to 2% on the 10-year before they then move the markets back to the upside. And a quick look at yesterday's price action. Very quiet for yesterday, as we saw in the daily chart. So I'm going to whiz through this. The market up in the pre-market in the futures, and then moving up, as we can see there, finding some resistance at the BRN. A lot of selling coming in at this area. They move prices through, and then you'll see going back up towards the high of the previous day, which was an all-time high at 15,031. See the selling coming in here, and there it is there, and then it's also selling pressure up. Thrust prices are thrust up, come back on towards the lows. It's not actually, sorry, it's not a selling pressure because the range of the bar is greater, but nonetheless you can see the selling there. Prices down to the BRN, and you can see them buying in at this level just to support prices. And then prices meander along the BRN, and I'm going to fast forward this because that's where they stayed during yesterday. And like I say, we are off into the Easter weekend celebrations. Prices trading down to the 200 MA, and then just like I say, really not reacting an awful lot. A bit of a down move in the mid-morning though, and then prices brought back. Here's the that's the Dow opening. Yesterday, I know we've already looked at it, but that's how it was when it just sprung into life. And the DAX not really following it. It just traded sideways, as you can see there, until we got to the news, which we had somewhere around about here. And we've got, I'll have to bring that up in a second. Well, whatever it was, it didn't make a lot of difference to the markets. I don't know why that should have shown up there. Didn't just slide it up high enough. But you can see again, we just got back to the BRN and the market was just sideways. There you go. So it was the pending home sales. These came out worse than expected, minus 10.6 instead of minus 10.3. And then we had the crude oil inventories, didn't we, in the afternoon? And this also coming out as well with a negative. Did I actually show that earlier? No, I couldn't have done. Yeah, it came out at minus 9 million barrels, as I recall, which means there's a shortage of crude, big demand at the moment. And there you go. I mean, it was just barely nothing yesterday for the DAX. So let's have just another quick look overnight, see where we are. We've got the DAX trading at the 200 MA. We've got the DP down here, we've got the high, and then of course we've got a new high that was made overnight just above this. So just before the futures market opens, let's just draw a line there so we can see where prices will have to take out in order to breach the high, the new all-time high for the DAX overnight. Okay, that's it for this one. Have a great Easter, enjoy the break, and I will see you on Tuesday after the Easter celebration. So have a good one, and as ever, thanks for watching. See you in the next.